stream. We are live, coming to you at 2:02 on the dot. That's two minutes after our regularly scheduled program. I am Ryan Dunstan with East Main Street Insurance. As always, we've got the handsome blue dot. Who are you again? Who do we have on the?
Chris Kamara at Cobalt Insurance Agency.
Nice. We are two independent insurance agents and are dedicating some time to make sure that we can help answer any questions, comments, concerns, ideas. There's a lot going on in the home insurance marketplace, so we want to make sure that we're help bringing you latest, greatest information that's come across our desks, top of the story. And then also, you know, it's hard to get an agent on the phone. It's even hard for ourselves to do business. And we want to make sure that we've got some time to help answer your questions and make sure that you're up to date on what's going on.
What has been going on? Write that one down because that's the best intro I've heard you say so far. I completely agree with everything you said, but that was the best encompassing I've seen to this point. And I just checked our socials, so we're live on all of our socials.
I should have recorded all that.
Yeah, good thing you've got it. Yeah. I apologize. I'm sitting in a car. I had a meeting that ran late, so I'm not going to go on camera.
Okay.
But I am here to talk through all this.
You having another messy hair day?
Yeah, no hair. The camera's just a little too close to my face sitting in the car.
Okay. It's been a few weeks since we went on, and as always in the California insurance marketplace, there has been some changes. There's been some new developments. We wanted to bring that to you so that way you're aware of it. What was it? The SB 982. Okay. Let me bring up that slide real quick so that way we can quickly go over it. Did you get one on the other SB?
I did not.
Okay.
That one was that information. Well, maybe I'm confused. What SB are you talking about?
I'm talking about SB Make It Fair.
This is Oh, yeah. No, I'm going to pull that one up as well. Sorry.
That's all right.
Overlapped. These are two different ones. I'll get a slide going for that in just a second.
Okay. So what is this? The AIR Act?
This is breaking news. Happened yesterday.
Wow.
So if you want to read that off, I'll send you the second slide.
So yeah, this is even news to me. So new AIR Act introduced SB 982. One of the senators, I'm not sure which county he's from, but Affordable Insurance and Recovery AIR Act. So Affordable Insurance Recovery, acronym AIR Act, yesterday. And that is to authorize the state attorney general to sue fossil fuel companies to recover costs for climate-induced disasters. Geez, I can't think of any fossil fuel companies that come to mind on that. It's probably an acronym name, which some people are aware of, but we don't want to throw anyone under the bus on that, but we'll let you lead to your own suspicions. And the goal is to use recovered funds to help lower premiums for homeowners and the FAIR plan. And yeah, I think that I kind of feel like there's going to be a lot of these AB acts that are going to start coming more to fruition and on the docket because voting's kind of coming up.
They're getting the message. I feel like politicians are getting the message that insurance premiums are out of control, and they're, for good or for bad, looking at ways to see how to make that better, right?
Yeah. Well, and there's a lot of constituents that are continually writing in, trying to find out ways to help lower their premiums because premiums are just starting to get out of control. So what's this other slide we got? We got here some more.
This is a little bit more about that AIR Act.
Okay.
So if you want to bring that one up.
Yeah. Yeah, this looks good inside the inside what it is. And we got polluter accountability, authorizes the Attorney General to sue fossil fuel companies that drove the climate change. We've got seeking reimbursement for the billions spent on climate-induced disasters like wildfires and floods. We've got direct premium relief, mandates that recovered funds be used strictly to buy down insurance rates for homeowners. So is that just going to be with helping to file for rate reductions?
I don't know. I mean, I'm seeing more and more of these ads where there's organizations that are running ads about suing, other businesses for the pollutions they're creating and holding them accountable. Again, for good or for bad, I don't agree or disagree. I don't know enough about it.
Yeah.
But they're trying to find other sources to help supplement the cost of insurance. That's how I'm interpreting it.
Okay.
But that's brand new. Like, we're talking about something that we don't have very much detail in, other than what I'm showing on the screen or you're showing on the screen, because it happened yesterday.
Okay, so it was just brought up, and then it's not even official yet. It just was brought up to everyone as far as it being on the docket to be voted on.
Yep, that's exactly right. I just sent you the other slide for the Make It Fair Act.
Okay. What else? There's okay, so the other thing on here was direct premium relief. Oh, the fair stabilization. So injects capital to the insurer of last resort to prevent insolvency and issues. I mean, I know that the FAIR Plan was trying to look at getting more bond infusion and availability to buy some bonds. So I wonder if that's going to help play into that, or maybe just give them extra money as well. That's interesting to kind of look at.
Yeah, again, it seems that people are being heard and attempts are being made.
Yeah.
And we'll see where that goes from there. But this is, from what I saw last year to what I'm seeing now, there's definitely more effort around this.
Okay. And then shifting the burden, so stops the cycle of policyholders paying for risk created by corporate profits. That's good. I feel like that's almost stopping the assessments essentially too. That's
it could be
policyholders.
It could
be. Well, that's some good late breaking news. What's the other one what we're going to chat about?
The Make It Fair Act.
Make it fair. We go from air, we go to air to fair. I like it.
Yeah.
That's a good transition. So that is what, AB 1680? 1680.
1680. Yeah.
So this is definitely something that's been in the works for years. And I know that there's been a lot of pushback between the Department of Insurance and the California FAIR Plan, but this is basically just saying we're going to try and help modernize what the FAIR Plan is and make it a full policy.
And there's been, I mean, there's pros and cons again, and I'm not trying to take a side, but I feel like there's been a lot more pushback on this overall, because if you look at where this goes, it almost ends competition in high fire areas. Everything would be the FAIR Plan, which not today's FAIR Plan, but the FAIR Plan they're trying to make it, which is full coverage, like a homeowner's policy.
Yeah, so they want to inject liability, of course, water damage, things that are on your
water damage.
Yep. Water damage, I think, is huge. You know, we've always talked and have known about
there be a need.
Exactly. So there would no longer be a need for a rat policy. I mean, I'm sure that they're going to incorporate theft if they already have vandalism and whatnot. But we, like I was going to say, we've always chatted and said water damage. There's been more water damage claims than fire claims. So how much of a shift now are they going to have to show to apply for and get rate? It's just going to be interesting.
What would that rate be though? Like,
right. Yeah. Not only that, but what is it? I didn't look and see. That's what I should probably go check and see, is how the new rate increase is scheduled. Because right now, they said it was supposed to be coming out in April. Here it is, middle of February, and I haven't really seen any approval yet. So their window to get approval and to implement is kind of coming up fast. So I really feel like it's going to get pushed to July, maybe even further after that. There's still a lot of talks of that rate increase coming, but the
year's going by quickly.
What?
The year's going by quickly. I agree.
Yeah. I mean, we're already here in February, but I guess, what I'm just trying to say is this rate increase is going to be, if it does happen this year, I don't even think it's going to incorporate the AB law, because that has to pass too.
Mm-hmm.
But it's going to be more. And I don't know. I mean, there's not only the rate increases on Fair Plan, but there's also these new carriers, these surplus lines carriers, and they're taking rate even quicker because they don't have to go through the standardized market that the Mercuries and the Farmers and the AAAs and everyone else has to kind of go through,
Mm-hmm, mm-hmm.
So rates are going to be very fluid. They're going to be moving very quickly. This is going to be the year for rate increases.
No one wants to hear that, right?
Yeah, no one wants to hear that. So the other thing that I liked about what the Department of Insurance put out about this new AB law is a lot of that is also going to go into helping the Fair Plan be more modernized for helping out clients, because there was that report of examination, and I don't know if I sent that to you or if you could even quickly do a quick little mock-up of it, but it was a lot of carriers, and this is public information. So there were principal officers and voting members that went through basically an entire analysis of the Fair Plan. And these are companies like Hartford and Travelers, State Farm. And they see that if they're going to make this law happen and put more money into Fair Plan, then it needs to be a better customer service oriented, needs to be a better running machine, because right now there's a lot of flaws.
Yeah,
Would you
agree? Oh, absolutely agree.
Do you concur?
So I looked for an update for the CDI, California Department of Insurance, and it says it's still pending review. So
and that's for the rate increase?
Yeah. That 35.8% rate increase that they filed for is still pending review.
Wow.
It's the first one to be filed under the Sustainable Insurance Strategy Guidelines. So with forward-looking catastrophe modeling.
Yeah. I mean, that's crazy. I think it's because it's trying to incorporate a lot more of the initiatives for wildfire hardening and taking clients into what their diligent efforts have been into account. So yeah, just real quick as a snippet, the Fair Plan has not developed a 3 to 5 year strategic plan to assess underwriting. The Fair Plan hired additional staff as of May 1st of 2025. They only had 254 employees. 32 was non-claim, compared to 133 that was employees' contractual resources available in 2022. So they're definitely just suffering, I feel like. I mean, or maybe they need to outsource.
What would that look like? That even then, if they outsourced, it would be learning curve, I guess.
Yeah. I just feel like if it was outsourced, you need to outsource actual divisions, like have a broker team, have a client-based team,
Claims
have
team.
claims team, yeah, endorsements team. I mean, things that they've tried to implement, but yeah, Fair Plan is probably one of the most scrutinized entities I feel like in the state of California right now, with how much
It's also
transparency
the
they have
fastest
to have.
growing carrier by far in California.
Mhm.
Still.
Yeah, they're definitely under a magnifying glass. Well, that's been fun. Okay, so is there a date on this of the AB 1680?
I was just on that screen. Let me go back. I'm looking. So there is no effective date. It's early. It's still very, very early because that was February 2nd. That was 4 days ago. It had its first reading in the legislature, and it still has to pass all three bodies. So yeah, it's way too early. And as a non-emergency bill, it would be January of the following year. So we wouldn't see that until 2027, January 2027.
They put in that that legislation, they said that the LA fires, it's already been 22 billion and that's been distributed.
Mm-hmm.
That's crazy.
Yeah.
I haven't seen what the final count was. Like I don't know if they'll ever show that, but it probably won't be.
Didn't we have a slide for that? How much that costed? I'm gonna pull it up. Hold on a second here.
Probably. Well, has anything else come across your desk that you've wanted to bring up or talk about?
There is a lot of conversation around E&S carriers. We're reshopping a significant amount of our clients, and it really, really does matter. Your carrier, what your options are, what your property is. You've got to do a lot of searching. If you don't have an independent agent, or if you do and they've exhausted all their avenues, find another agent, because we don't all have the same carriers. But there's a lot of shopping to find the right carrier.
Yeah. Well, I would say there's been a lot of clients that have come across my desk that have out-of-state brokers still. And it's like, they're definitely not getting appointed with some of these excess and surplus lines carriers that we have access to. So
yeah,
if you're with an out-of-state broker, definitely shop to a local broker and see what's going on. If you're with even an out of area, like I've got clients in Northern California where I'm at, and they have SoCal brokers like down in San Diego. So they may have access to some carriers that I don't, but at the same time, they're probably not as up to date on building codes, building costs.
Knowing the market, right? Like we know which carriers are going to play where and in what criteria.
Yep. Yeah. I mean, I told a lady the other day, I couldn't take her on, but I said, hey, go be part of this wildfire prepared program. Maybe look to, like a Farmers or a AAA after you get that designation. But there aren't a lot of companies that are writing because, I see probably more companies in my area all the time and know who's writing and who's not. So
going back to what you were talking about for the payout of 22 billion so far for Palisades and Eaton. So according to what I'm looking at, we went over in a prior podcast, the most expensive wildfire in the US before that was 30 billion in 2018.
Wow.
So 22 paid out so far, but the estimate is at 65 billion. We're probably going to eclipse everything in the past at this point.
Yeah. 65 billion. Oh my gosh.
Yeah, that's what the projected total cost will be, not what was paid out so far.
Right. That's scary.
Yeah, what else are you seeing? I mean, it's been busy. I know we've had some scheduling conflicts, and it's been a lot of stuff coming in, a lot of people asking for quotes.
Yeah.
I did hear, in the good news front, I did hear from one client this morning, and they're out in Loomis, and they were on the California Fair Plan and were able to get a policy with Farmers. So,
Yep.
and he reached out to me seeing if I could do something else, and I couldn't do any better. So I was very impressed. I'm glad to hear that there's some admitted carriers, including captives, coming in and writing some of this harder to write stuff.
And I think that just correlates to that promise that Farmers had made, saying that they were going to write another 350,000 new clients in the WUI areas.
Yeah. Explain what WUI is so people know what we're talking about.
WUI, isn't that like the wildland urban interface area? So
Yep. Mm-hmm.
I wish I had a map of everywhere that shows where the WUI is.
Well, this client, just so you know, I told them to stay with Farmers, and they're paying $8,000 a year or right around there. So it's not getting cheaper. It's just getting them off the Fair Plan to what is more of a comprehensive policy than the Fair Plan with a combined companion or DIC policy.
Mm-hmm. Well, I do have.
I believe Farmers doesn't have, and I don't know enough about it because I don't have Farmers. They're captive, but I believe they have a singular deductible and not a broken out deductible.
Wow.
99% sure that's right.
That's cool. I like that.
Did you find you want me to go look for it?
So I'm on the USFS, United States Forest Service maps, and it's very, I don't know. It's a little harder to read, that's for sure. But there's a lot of red down on like Douglas Boulevard, down off Highway 80. There's a lot of yellow that's up.
Pull it up. Let's see. I want to look.
Okay. I'll do my best, because it's just a roughie.
But you're pulling it up on the internet, right? It's public information.
Yeah.
Oh, there we go.
Actually, I'm going to replace it with Chrome tab on title map. This one, sorry. So you can, like, here's yellow, orange.
On the right side, roll up to that legend. There we go. Yeah. So that way people can see Wildland Urban Interface 2020. That's the yellow. Intermix, I guess that's more. That's orange. So, I'm
like
assuming that was the 80.
Here's Stanford Ranch, which is this area.
Yeah, go down back towards the 80.
The 80? What was down here?
Yeah, I think it's that one line. Yep, right there. And then go out to the right, north and right. That's going to be more Loomis area, right? So.
Yeah, I would say this is probably Loomis, Penryn.
Yep. So as you can see, even from a map almost 5-6 years old now, it's looking as intermix versus interface.
So this is Newcastle.
Yeah. So everything in the town of Newcastle is looked at a wildland urban interface.
Yep.
Even in the city or town or whatever you want to call it.
Mike here's like, what about? I'm pretty sure. Yep.
Mm-hmm. What about Auburn? Can you bring that one up?
This is Auburn. All this.
Yeah. So all orange. And then Grass Valley.
There's Grass Valley. So all this is intermix. Interface is kind of, this is town, this is 20, and 49. This is going to be Nevada City up here.
Yep.
It's going to be all Grass Valley. So
we're talking about a large region of populated area in forested area.
Yeah. So that's where they said they were going to be writing at, was in all of the orange, essentially.
No, in the yellow.
Oh, yellow. Sorry, yellow is the interface. Sorry.
In the orange, we're looking at the Fair Plan and ENS, and I think that's it.
Mm-hmm. Well,
can you go back down to Newcastle and Loomis area just to show that again? How much of that is now? What's purple? Medium and high housing density. Okay.
So this sort of.
That's a cool map. What website is this? The U.S. Fire Service?
Yeah. Yeah, I wonder if I can.
So what are we looking at? What's this area?
Which area?
Right on the map. What's the area?
Oh, right here.
Yeah.
Elm. So this is Auburn. You want Loomis?
Yes, please.
King Road, right here.
So see how much of that is Fair Plan and ENS, and maybe you can get an admitted carrier in the yellow interface area.
Mm-hmm.
Maybe.
Yeah, which would be, this is like downtown Lincoln,
itself, right? Yep.
And then this is all on the train tracks, and then this is Stanford Ranch area.
Yep. And even those areas are hard to write right now. We're still looking at ENS in those areas, which you wouldn't have seen 4 years ago, 3 years ago, no, 5 years ago. Pretty cool.
What else did I was bringing up quickly that wildfire prepared program. You know, a lot of people should definitely look at that. I feel like that's going to start to be a big trend moving forward. And being one of those applicable. Now, it does cost quite a bit of money to become a part of this program, but you can.
What is quite a bit? I'm curious.
Yeah, I guess we can take
couple hundred, couple grand.
I believe it's just a couple hundred.
Oh, okay. So the resulting savings year after year would be worthwhile then?
Yeah. I mean, there's two programs, and it does mirror your program with the sustainable insurance strategy as far as what you need to be resilient for.
Okay.
But, yeah, they definitely go over and give great detail on all of the zones, what you get with a base versus the plus, and then who they work with. So there was a podcast that I was on with United policyholders.
Mm-hmm.
And there's a chick from AAA who mentioned that if you were canceled, like I think it was like last year or something like that, and then you went out and you got wildfire prepared, you'd then be eligible to go back onto AAA and have like a 2-year like customary gap of, or not gap, but a like a grandfather guarantee.
That's cool.
Doesn't say how much they are. I thought that it did have it, but maybe not.
This is IBFS or whatever?
IBHS, yeah.
IBHS, sorry. Let me see if I can find it while we're doing this.
Okay. So what I did is I was a part of a nonprofit in our area that is also trying to be a coalition for helping people apply for grants, people be a part of Firewise communities, and they asked me to come speak about the insurance market that we have going on in our area. And Wildfire Prepared had come up I spoke a little bit about it just because I know of the program, just from all of the research and info that I usually dig through, and had tried to become an agent of it, but they require quite a bit of money to become a certified agent to sell their product.
Yeah, so let me speak to that. I found some information. So the evaluation and application fees. So you got to hire an independent third-party evaluator. That's what you're talking about as agent, I think. So for the fortified home, the evaluation fee ranges between $300 and $600, and it covers the initial inspection and final verification after the work's completed. The designation lasts for 5 years, and renewal costs between $50 and $100 plus a reinspection.
Oh, wow.
The wildfire prepared home that you pay to IBHS for the certification is $125. And the inspection fee, depending on the size of the home and the level of the assessment, is between $500 and $1,000. The real cost difference is between $1,000 and $3,000 for the work that's performed. So that's the bigger cost. Getting the actual home to that level to meet those criteria.
And at the end of the day, I feel like this would be definitely something that's someone who's moving into their home, at the beginning of their life cycle, because they're going to see savings, transpire against their entire cost of living at the home for 5-10 years.
I mean, if I'm looking at clients that are paying, and we'll use some of the extremes, but let's say they're paying $9,000 or $8,000, and they spend $2,000 that year, but they save $1,000 for the next 5 years at the low end, that's going to be worth it, right?
Yep.
Or even more so, if you get the certification and you get written with an admitted carrier, then you're saving significant money off of that.
And that's going to be the goal, is there's probably going to be more carriers like the State Farms and Farmers and Mercuries that are going to be a part of that program.
They're going to have appetite for it. Yep.
Yeah, that's why Mercury would be a really good option for an independent agent, because these other companies are captive. So being a part of a company that you're an independent agent is going to be a part of is going to be huge.
Yep. Anything else you want to go over? We made it over a half an hour. I know we rambled a little bit.
Yeah, we did. And I don't think we had any questions come in, which is normal.
Or off cycle because we're not on a Thursday, so it's fine.
That's true. I was hoping with Friday, more people are home, more people might be apt to popping in, but
we'll want to probably do, and we can take this offline, but we'll probably want to do one after 5 or after 6 where people can see it.
Yeah, we mentioned that before for sure.
Cool, man. Well, have a great weekend. I'm going to shut this computer off and drive off for my meeting. I've been sitting in the parking lot the whole time.
Nice, man.
All right. Take care.
Yep.